Have you ever done a blog or podcast about crowdfunding nuts and bolts, understanding the internal rate of return, equity returns, how to monitor how the funds are doing, etc.? I find this stuff very overwhelming personally, and frankly, it's not something I have the background financially and understand well. I've decided to get off the sidelines related to real estate. I just entered this space with a REIT through Vanguard. Likely I'll invest through CrowdStreet or CityVest soon as well, maybe Equity Mobile based on stuff from you and Physician on Fire. I thought a primer on understanding crowdfunding returns, etc., would be a nice addition to your podcast. First of all, this is totally optional. If you feel overwhelmed by this, if you don't feel like you can understand it, you don't have to invest in it. There are no called strikes in investing. You do not have to invest in real estate at all. You certainly don't have to invest in crowdfunded real estate. You don't have to invest in syndicated real estate or private real estate funds. You can buy the Vanguard REIT Index Fund. It's a very simple way to get into real estate. But just realize that you shouldn't feel anxious because you're not doing what somebody else is doing. There's a lot of fear of missing out in investing. But the truth is you can't invest in everything. You can't invest with all of the crowdfunding companies. You can't invest in every asset class that somebody can come up with, at least not in any meaningful way. Nor would you want to, because your portfolio would be so complex that nobody could keep track of it. You'd just become an investment collector. You'd have a collection of investments without any underlying plan. So realize that to start with. IRR, internal rate of return. This applies to stock market and mutual fund investing just as much as it does to real estate. If you want to learn how to calculate that, I think the best way is using Excel's XIRR function. There's a tutorial on the blog for how to do that. Just Google XIRR and White Coat Investor and it'll pop right up. If you want to learn how to calculate those returns. But basically all that does is calculate your investment return, taking into account cash flows in and cash flows out. In an equity deal, as far as real estate goes, your return comes from four places. It comes from income, right? The rent in that exceeds the amount of expenses. It comes from appreciation of the property. It comes from the pay down of the mortgage, assuming you don't have an interest-only mortgage on it. And it comes from the tax shelter provided by depreciation. That's basically where your return comes from in equity real estate. The problem or the benefit of a syndicated real estate deal is you're basically locked in. You have to do all your due diligence up front, and then you're generally locked in for a period of 1 to 10 years. And so at that point, it doesn't really do you a lot of good to monitor the fund or the investment because you can't get out. It's illiquid. That's a big downside of it, unless you feel like you're being paid a high enough return that you're being compensated for your illiquidity. So if you really want to get into crowdfunded real estate, I would recommend you start slowly with the minimum amounts, diversify among types of deals, diversify among platforms. And with a relatively small amount of money, you'll be able to diversify well enough that you can watch for a year or 2 or 3 and kind of get a sense of how these deals work. If you read through all the memorandums that they send you and you follow their updates and you look around on their website, you'll pretty quickly gain an understanding of how the deals work. Now, that doesn't mean you're going to become an expert at choosing them. In fact, I still don't feel like I'm particularly good at choosing them, although I've made a profit on every one of them I've made. But honestly, I'm not particularly good at this. And so I've decided I'm more moving toward funds than I am selecting the investments myself. The difficulty with that, of course, is that a lot of these funds have relatively high minimums. It might be $50,000, $100,000, $250,000, $1 million, $10 million. It just depends on the fund. And obviously, most of us are going to be priced out at some point from those funds. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
My dad, your host, Dr. Dolly, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.